Welcome to Mrin Talks, my vlog where I take you through the steps of investing. In vlog 34, I'm going to be talking about the Riskometer. SEBI has recently come out with new guidelines on the Riskometer, which are going to be applicable from January 1st, 2021. There have been many changes made. Firstly, the Riskometer is going to be done scheme-wise, and there is some new parameters that have also been included in the Riskometer this time. So what is the Riskometer? Well, the Riskometer is a pictorial chart which basically depicts the risk associated with any particular investment. And now there are going to be 6 categories, which are low risk, low to moderate risk, moderately high risk, and very high risk. The Riskometer is going to be evaluated on a monthly basis, and the Riskometer is of course present in all the information documents relating to any mutual fund. Also online, when you're searching for any information regarding any mutual fund, you will also find the Riskometer over there as well. On an annual basis, the fund houses have to declare how many times the Riskometer changed during the year. And please note that a change in the Riskometer is not a change in the fundamental attributes of the scheme. So how will the Riskometer work for different categories? Let's first start by understanding how the Riskometer will work on debt funds. Debt funds are going to be categorized based on 3 primary risks, which is credit risk, duration risk, and liquidity risk. First off, when we look at credit risk, then the debt securities of the schemes will be valued for credit risk on a scale of 1 to 12, as you can see in the particular chart. Interest rate risk, the debt schemes will be valued for interest rate risk on a scale of 1 to 6, with 1 being the least and 6 being the highest, based on the Macaulay duration of the scheme's portfolio. And as far as liquidity risk is concerned, SEBI has actually introduced this newly, wherein basis the listing status, the credit rating, and the structure of the debt instrument, a liquidity risk score is going to be assigned. Very importantly, they will calculate a weighted average return of all these 3 risks put together. But if the weighted average return of all the risks put together is lesser than the liquidity risk, then the risk score for the particular scheme will actually be the liquidity risk score. In light of all the events that we saw happening this year with debt funds, especially the credit risk funds, the basis of having a higher risk associated with liquidity risk does seem to be a good idea. And the other thing is that now a credit scheme or a duration scheme will also have weightage for duration or credit. As far as equity funds are concerned, they're going to be assessed at 3 levels. One is the market capitalization, the volatility, and the impact cost. So as you can see, equity schemes shall be assessed for market capitalization as follows, which is large cap will be given a rating of 5, mid cap 7, and small cap 9. And the market capitalization data is published by AMFI every 6 months, and this will be used for the assessment. Equity schemes will also be assessed on basis of the daily volatility of the security. And again, there is a rating matrix that has been provided by SEBI. Impact cost, which basically measures liquidity related costs. And this is going to be based on the average impact cost of the security for the previous 3 months, basically. Again, there's a rating matrix that has been given for impact cost as well. And the final risk score is essentially a weighted average of the impact cost, the volatility, and the market capitalization. Investments in gold have been given a risk score of 4. Foreign securities have been given a risk score of 7. Cash, of course, lowest risk, so it's been given a score of 1. And REITs have been given a risk score of 7. Now, the risk scores for these asset classes are relevant when you have multi-asset funds, or you have funds which are also holding some of these sort of securities as well. The new Riskometer being standardized is going to be much more useful for investors, and being on a scheme level and being looked at on a monthly basis certainly will ensure that for an investor, The first thing when they look in a particular scheme is to see what is the risk level of the scheme. And I think the Riskometer is going to be a good judge of this. But remember, when you are evaluating any scheme for investment, there are various other parameters to consider before deciding an investment. The Riskometer is just the start. Make sure you click on the bell icon to subscribe. Cheers.